Information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview.
Paul Johnson, the CEO of Power Metal Resources at the Power Metal Resources office down in Farnborough. Paul, it's good to be with you again in person. How are things generally, the markets? Let's start with that. Not looking so good really at the minute.
Well, it depends if you're looking to buy shares or not. If you're looking to buy into the space, it is a gift of an opportunity, I think, across so many companies. In the UK markets, in the Canadian markets, the Australian markets, the opportunities are there. But as we know, people don't buy at the lows, they like to buy at the highs. From a business perspective, Power is firing up. We promised we would build out our portfolio. We said that when we built it out and we'd done initial exploration work, we would start the process of vending out, creating value across certain interests. We have multiple disposals and IPOs in process at the moment. And then we said we'd focus our portfolio on more one or two projects with more intensive exploration, which is exactly what we're doing right now. So we're in a good place. Market is a little bit lost. We look at our share price, the work that the team's been doing, the progress that we're making, and it's just a disconnect. And that happens in the junior resource space.
I mean, it must be very frustrating to see the share price now, around about 0.8, certainly under a penny. With all the work you're doing, it must be very frustrating. I think sometimes the best way to perhaps predict the future or see what's to come is to look at the past, because all we've got. You are older than me. You've been, through a few cycles, perhaps. Certainly 2008, 2003. Do you see any similarities from those time periods? And could you make any, not predictions, but how does it make you feel about where we are now and what's to come? Certainly with regards to the green economy shift that we know is coming, and this sector is very cyclical.
Was it Mark Twain that said that history often repeats but doesn't rhyme, or something like that? So the same events or the same circumstances happen in the market, and we're getting these peaks and troughs as we always have done. And there's often different reasons behind it. And you people say, well, it's different this time. Well, the reason the event might be different, in this case, the transition to green technology, is such an immense shift that's requiring so much metal, nickel, copper, zinc, from around the world, when the world simply doesn't have metals. So we don't know where we're going, but their sensible expectation should be that we'll see a dramatic rise in metal prices, a dramatic rise in metal producers, and an even more dramatic rise amongst the junior resource companies that are going to find the next big deposits, because the majors, generally speaking, are not. It's little companies like old Power Metal Resources that will find the deposits through exploration. So, yeah, we've seen these troughs before, because we're in a trough now. We saw a particularly bad one in 2008 when the global financial crisis kicked in. We've seen a trough with the COVID-19 situation that emerged in 2020, and we've seen mini troughs on the way through. I've certainly seen 4 or 5 over the last 10 years. The sector always recovers. The best time to buy is at the lows. And it doesn't matter if it drops a bit more, because we're pretty much smashed anyway. So it can't really go too much further down. If the markets could take our share prices negative, they probably would do. But there's a limit to this. And that's 0. And then it has to go back up. From my perspective, I've been positioning the business to prime it for growth in a positive market, which is where I believe our market's going. And with the different elements that we have, the diversified nature, the way that we hold our interests, some in investments and some in active project stakes, and the broad spectrum of geological opportunities we're looking at and different commodities, I think we're perfectly well set. Just the question is, when does it all start?
Yeah, when does it all start indeed? And when do you lift off from this low? I think there's no doubt anyone who follows this space, or just generally people, should know that the green economy is going to come. It's going to come hard if governments are going to do this. I heard a quote that we have to create the investment of 6 United States of America in the next 30 years if the world is going down this green economy shift. Where are we sitting at the moment? I mean, another quote from that same person was a once-in-a-lifetime opportunity for investors in this space. Looking at LME inventories, demand for what's to come, what are you seeing? What are you predicting is going to happen?
Well, there's no metal available. You look at the LME, you see nickel on the floor, zinc on the floor, copper's a little bit more volatile in terms of available stocks. There's not enough lithium, there's not enough cobalt. You can pretty much pick any commodity you want. America, the USGS, the United States Geological Survey, produced a list of critical minerals. Tungsten is on there, and we have within our portfolio the largest undeveloped tungsten deposit in the United States. And you would think for that kind of monumental flagship interest, that's within Golden Metal Resources, one of our spin-outs, that our market value will be immeasurably higher on the back of it. But it isn't. It's just the nature of things. Now, the green technology revolution isn't happening. Okay, might as well stop it right now because there's not the metal to make it happen. So as much as people pretend that we can transition to a new green world, we can't. We've got to open up the process of investing in junior resource companies that can go and find the deposits. There's got to be a massive amount of capital inflow into that sector. And it's a little bit like the boy that tries to plug the hole in the dam. There's an enormous wall of money coming through to us in our space. It will drive the valuations of the more well-positioned juniors to levels that we can only wildly speculate on at the moment. And when that comes, work will be done to find the big deposits. Then there's the issue of when you find those deposits is permitting through into production. You can't have a situation as we've had for decades now where it takes 15 to 20 years to bring a new discovery into production on average. It has to happen faster. Mm-hmm. So there's got to be a big shift in terms of permitting and supporting these projects through the production process. And of course, when you get a more positive regulatory environment, it further increases the valuation of the juniors because the projects they're finding can be pushed forward into production quicker. So we're sat perfectly positioned. As a business, we're ready to go with our portfolio in a world that needs the metal and hasn't got it. And it's a little bit of a lie to suggest that metal availability is fine. That's what we all assume. We can buy the copper we need, we can buy whatever we need to do the things we want to do, and we can't. So that's a perfect backdrop. And there will be a regulatory loosening to enable these mining projects to get pushed forward and to start producing the metal that's so essentially needed. And that's a good thing. We're responding to that in Power Metal by significantly increasing our ESG initiatives because we want to be seen not just as a popular investment, but one that's doing its business properly. And that, I think, will encourage a lot of institutional support of the work that we're doing.
Okay. Well, long term, I agree with you that the space is going to really have its time in the sun, and Power Metal is very well positioned. I think we said earlier, this is the only game where one RNS can completely transform the company, but also shareholders' lives. How do you think perhaps a catalyst event might be involved here? Because long term, I'm not worried. Short term, I'm a little bit worried. We've seen a huge influx of capital into the markets, a huge bubble being inflated by new investors coming in during the COVID pandemic. We see the housing market, insane prices. People are not able to find property that they're having to offer above the asking price. We start to see interest rates rising. So things are happening, and we're going to have to see this huge reallocation of capital. And the short term has me worried that it's going to be disorderly for, I don't know, the next 12 months, 18 months. I'm sure Power is prepared to go through that. But what's your opinion on the short term? And thinking again back to the past, was there any catalyst event that just happened? Or is it a reallocation of capital? Does it happen slowly and then accelerates?
Yeah, it always feels like that famous phrase, when the tide comes in, all boats lift. Well, they don't really. Certain boats do lift before others, and we'll see 1, 2, 3, 4 junior resource companies, the better known companies. Some of them will be spoofs, I'm sure, but we'll see some of the good companies lifting earlier. And they'll go up from a penny to 3 or 4 pence, and they won't collapse down as everyone expects, and it will start of a new trading dynamic in the market. So you never know when that's going to start. It always starts in the period of maximum negativity. The fact that you are concerned about the short term replicates what almost every single investor I've spoken to, or company director, or anyone involved in supporting these companies, brokers and so on, they all have the same view that there is no hope in the short term for the space. And that means that we've got the perfect backdrop for a recovery, and it will surprise us when it happens. I can only prepare myself and my business for that moment. Now, I know we have the best social media stats I've ever had in my life running companies. You know, the biggest number of views of tweets, of various stuff that we put out on our website, of the reports that we put out that people download and read. I can see what's happening in the company and the attention on the company. At some point, that attention will shift into buying. And when it shifts into buying, and that buying usurps the selling that's been happening, then we'll see an adjustment in the valuation of the business. Where will it go? I don't know. Where's my target? I don't really have one, but ultimately I want this stock in the tens of pence per share, because that's what we built to. We haven't worked for 3 years to build this broad global business for us to get a couple of 100% on our share price from now. That's just not the case. We built it to be an immense business targeting a mid-tier status and doing it with innovation and creativity in terms of how we do our deals, bring projects in, what we do with them when they're in the business, and how we handle them in terms of spin-outs, disposals and value creation at the other end. And I think we're pretty much all set. So I've got a lot more optimism than you, and maybe I'm the last ball that needs to turn. But I've been here many times before. Back in 2009 I had a few £1,000s. Right, I've got a little bit more than a few £1,000s now, and haven't done anything else apart from natural resources really over the last 13, 14 years, or 13 years. And I've got a great degree of optimism that this sector can deliver, but I can't promise you when.
No. Have we reached capitulation yet?
How do you feel at the moment?
No.
Right, and what gives you that confidence that we haven't reached capitulation?
Because I don't think enough pain has been felt by a lot of new investors in the space. I think the money's been too easy, certainly for the last 2 or 3 years. Well, even longer. You think about QE.
Yeah, and how many investors do you speak to that have confidence in the markets?
I get the feeling that people are confident in the market, so I don't feel that they're feeling fear. I certainly don't think they're feeling pain, and I could be wrong. Maybe there won't be pain. But I think certainly tech and crypto, I think a lot of those guys have got to feel some pain.
Yeah, I'm not bothered about tech and crypto. I mean, I've had a little bit of involvement in both of them over the years. You look at the mining sector, the junior exploration sector, we've seen in the last 12 to 18 months some of the biggest increases in the prices of the metals that we've ever seen in a short space of time, because the world realised that they needed metals, and there was a lot of speculation with events happening in the world leading people to buy those commodities and driving the price up. Over that period, the junior resource sector fell, and it seems like we've bifurcated from the underlying commodity that we're all searching for, commodities that we're all searching for. It's been a disastrous 18 months in the junior resource space. The markets have done well over that period. Crypto did well over that period. The metal prices did well over that period, but we just collapsed across the sector. So we're almost a microcosm, and it's difficult to predict, where we will perform vis the rest of the market. We're the only sector that globally has seen that collapse. And whether it's Australian markets, Canadian markets or UK markets. So could the rest of the world crumple and could we rise like a phoenix from the ashes? It's perfectly possible. We are the only part of the metals environment that will find the major discoveries at the level that's needed to support the world going forward. So whatever happens in the short term doesn't really matter. If we can work through this period and for junior resource companies, if they can survive through to the end of it, then they're in a great position.
I agree with that.
But survival is not what it's about. It's about actually building things during this period. Down phases in the market are great, because you can go and do the type of transactions, whether it's acquisition or disposal, that you could not do in a booming market. Think about it like this. If I wanted to dispose of one of our projects to another listed company, then if the market's booming in that listed company and its share price is rising, they won't want to do anything, because they'll feel that what they've already got is driving the share price. Why should they do anything? They won't necessarily have a medium-term vision about, we need something for next year to really keep this momentum going. They just won't be interested. So I can do deals with projects in a difficult market more easily than in an easy market where everything's flying. It's the same on acquisitions for different reasons, but so this is our time. I can structure and reorganize. I can put IPO processes in place. Why do we do IPOs now? Because if the market's really poor right now, we don't want to be listing today. We want to be listing tomorrow. So we need to do the work today. And that's what we're doing. We're doing the work to get our vehicles ready for that listing process into a more positive climate.
Okay. Well, let me ask you just a final question, Paul. Do you know what a BHAG is? A big, hairy, audacious goal. I wonder if I can ask you what your BHAG is for Power Metals.
Oh, for you to come back in a year's time and say you were right about 15 times on the share price.
Okay, that's a good answer. Well, thank you very much, Paul Johnson, the CEO of Power Metal Resources, for giving me your time today.
Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stockboxmedia.com. Thank you for watching.